the High-Tech Microwave Corporation. We're representing SNAP. So today we'll be talking about the background, some positive reasons to invest, some potential risks of investing, and conclude with a summary of the company. First off, we'll start off with the background.
So, who is High-Tech Microwave Corporation, right? Well, we actually decided to go a lot smaller than Apple or any of the other large ones. They're actually a company that's in the semiconductor and circuits industry, and what's actually really cool about this company is that they're involved in a lot of different markets. For example, they're involved in the automotive market, they're involved in the fiber optics and networking market, they're involved in the space, military, and much others. So, with being involved in such vast markets, it allows them to be able to create a lot of products. What you see on this slide right here is there are 36 product lines that they have right now. These are their basic product lines, which means that from these 36 product lines, they're actually able to create thousands of custom product lines for their different customers. Now, some of the positive reasons to actually invest in the company. What you see here are the two most innovative projects that they've actually come out with in the past 2 months of this year alone. The groundbreaking wind-band quantifier solution and the MSPS analog to digital converter, both which are heavily used by military for large-scale projects. So what you see in this plot actually is the recommendation by analysts at Capital.com to actually invest in the company now compared to the other 7 competitors. The one on the far left is actually AMD, one of the Fortune 500 companies. It's actually recommended to not even buy, but to actually hold your stock right now, while our company is actually wanting to, asking people to buy their stock. So some of the other positive reasons is you can actually see some revenue increase in the last 12-month period. But what I really want to highlight in this plot is the finished goods versus the raw materials. And what you can actually see is that the raw materials is a relatively low value compared to the raw material. And what the raw material indicates is future growth. The company is actually seeing that there's going to be a demand for their products in the upcoming year. And this is actually supported by the 2 plots that you see here, their 6-month stock growth and their stock growth history, which they've had an increasing trend since they became a public company. And I'll pass it on to JC to finish the presentation.
All right, so building off of the reset, I want to point out their income statement. The main thing that I want you to notice about their income statement is two things. One is that it shows 3 years, from 2009 to 2010, they actually had a roughly 67% increase in their net income. And from 2010 to 2011, they continued to increase by about 10%. So some of the potential risks in investing in this company, there's a lot of competition in this industry, obviously. There's so many companies trying to get into it, so with there being many more companies that are coming out with new innovative things, it could potentially drive your stock price down. This is a cyclic industry, meaning that when there's a high demand, some companies can't meet the demand of the public, or if the demand is low, they're going through a really rough time. The beta is a measure of the risk. This company has a risk factor of 1.08, which is higher than the market average. The price-earnings ratio is a 27.8. Currently, the average and ideal is about 20 to 25, and the lower the better. I want to talk to you a little bit about the S-curve. The S-curve talks about the life cycle, the life of a technology. So currently we're in a takeoff, and this is evident by looking at your technology, look at your phones over the past 5 years. Your iPhone has significantly gotten smaller, cheaper, and faster. Well, not necessarily cheaper. That's a different story. So in conclusion, I want to talk about, as engineers, it's recommended that you go out and invest early. The earlier you start investing, the faster you'll start seeing the returns on your investments. HITT can respond quickly to market changes, making it a company that can be really valuable to putting in a portfolio, or if you want to just invest on it alone. The reason for this is that they're different from other semiconductor companies because they don't own their own fabrication facilities. They outsource them to a third party, making it more easy for them to adapt to those market changes. In the rising industry that we're currently in, the 1.8 beta average means that it's actually a lot better, because for example, if the market goes up 10%, you're making a 10.8% increase as opposed to the 10%. The price-to-earnings ratio will go down, estimated by Yahoo Finance, which is a good thing. And lastly, I recommend that if you're going to invest in a portfolio. Thank you.
Okay, well, it's not actually completely heavily invested in the military. It's actually only one of its 7 components. The other components are the automotive. What I did highlight were the 2 military components, which were the 2 products that they came out with. But again, it's only 1/7 of the actual products, or the actual markets that they're involved in.
And we highlighted those products because those are the most recent things that come out with. This is a diverse company, like a very good company to invest in because of all the different sectors that are involved in.
So, sorry, this is quick off. So how much is it as a percent of revenue? How much is that military revenue?
Yeah, honestly, we didn't really look into the percent revenue for the military.
Just wondering.
Yeah.
Thanks, guys.
All right.
Thank you.